The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, good afternoon. I'm Nadine Blaney.
And I'm Danny Akuye.
It is the 8th of April, and we had an interesting session today because we had iron ore firmly in our sights, we had gold firmly in our sights as well. But there's sort of a big weight of expectation coming later in the week, particularly on the macro front.
Absolutely. So, let's have a look because there is a lot going on underneath the surface today. But the COB 200 up around 2.5 points, almost 0.2%, and the ASX 200 pretty similar, up 12 points, and also just over 0.15%, Nadine. But really mixed picture when it came to what was happening beneath the surface, as you said. We've got a big week macro-wise, but there was, where do we start? Maybe with the three themes, which might give us a little bit of a hint.
Well, I was going to say, at least it was better than Friday. You weren't here, but Friday was, pretty dismal out there on markets. We had that NFP, the non-farm payroll report, come through on Friday. But to our earlier point, commodities just keep on keeping on.
Absolutely. The commodities party, I called it. It's partying on, and it looks as though iron ore has joined the party today, wasn't it? It was rallying in Singapore back over $100 a tonne. So that was some good news today, although I'm not sure those material stocks necessarily caught the same love. Well, a couple of them maybe did. Fortescue did, but BHP is actually a little bit off today.
Bit of corporate news out today.
Corporate chaos,
Yeah.
I thought was a good title for that one, because literally we had share prices up 25% and share prices down 25%.
360 comes to mind. Elders also comes to mind. What's really interesting about the Elders downgrade that came through, talking about client sentiment, and they referenced the Bureau of Meteorology's El Nino call, which of course did not come to fruition, but that was enough to dent their client sentiment, particularly for the first half. Now they're talking about improved sentiment. I was doing a bit of research. ABARES is talking about improved sentiment. Rabobank says that, Australian farmers are feeling really good, but you can see the damage that's done. So a downgrade coming through there, and it followed an upgrade to outperform by Macquarie just on Friday.
Yeah, it's interesting because I think you'll find actually Western Australia has had dreadful El Nino, so you've got to be just split it out, because I think they've had really different to what the East Coast is. But nevertheless, we're all waiting and watching, because of course this week is a really big week. We have the March CPI print in the US and the PPI, and of course lots of the experts, quote unquote, are looking to see whether some of the seasonal factors wash out in this March CPI print. So core CPI, they're looking for 0.3%, which compares to February of 0.4%.
Okay, best sector today? Tech, actually. We saw Infotech as a sector rising by about 1%. Of course, the last of the day's trades are coming through. Sector-wise, actually pretty positive overall. 9 out of 11 looking good. What were the exceptions? Energy?
Yes,
staples.
Yes, energy. So there's a little bit of a dip down in terms of crude oil prices, with some of the geopolitics in Israel calming down, but really it was that beach energy off almost 15%, because they've downgraded that Waitsia, or I should say upgraded the costs of Waitsia yet again, and that really affected the share price.
Yeah, there you go. You got a bit of life there in Paladin Energy, up by 6.6%. Okay, so we did mention Elders downgrading. Life 360 was up by the end of the day by 16%, outpacing market expectations after drawing in 4.8 million active users in a record first quarter. And I will say, you've got to watch the call. On Friday, so predating this announcement coming from Life 360 today, Adam Dawes called it a table-thumping buy. Well, if he would have bought on Friday, it would have been pretty good.
Indeed. Maybe that, yes. Well done for Adam on that one. Also, as we said, the Elders falling by about 24%, and those results coming in lower than expected. We mentioned the El Nino impact, so some people betting sentiment-wise that they probably didn't go out and plant all those crops that they were meant to.
Yeah, ongoing margin pressures in their agri chemicals space as well, though they do expect that to turn around. So Qantas, if you read the fin, of course you'll be all across this, making changes to its frequent flyer. So apparently they're going to be putting more reward seats And I think it's part of the PR campaign, obviously, to really turn around a lot of the negative sentiment to the flying kangaroo.
Absolutely. And APM Human Services, they're almost 30% after lowering its profits estimates. And its largest shareholder, Madison Dearborn Partners, submitted a revised non-binding indicative offer for the firm over the weekend.
Ansell, it was stock of the day in a trading halt, though. It's going to be acquiring the, the assets in its sphere from Kimberly-Clark. It's a deal worth $640 million, so that's a $400 million cap raising priced at $22.50 per share. So let's find out what Gaurav Sodhi and Mathan Somasundaram said about Ansell.
This is a really good step. I like the deal, like the structure. I think it's cheap enough to buy. I'm happy to buy it. I don't own it. The funds don't own it. Yeah. But for conservative investors, this is a perfectly sensible idea to own.
Okay, great. I think it's good, but fresh money, I'm not jumping into it right now. I'm still waiting to see how the growth plays out. But look, like management, I like the global model, and the branding is good. So I'm happy, and I think this one makes them even better play.
Pretty positive there in a few words.
For a company that really has been really struggling post-pandemic, it has been a little bit of a nightmare. But should we bring in our guest of the day? And it's Monday, which means Josh Gilbert is here from eToro. Hey Josh, great to see you.
How are we, guys?
Good, good, good. So, can you believe it? It's come around again. The CPI and the PPI week from the US, which looks as though it possibly is going to be the biggest news this week. What are you thinking?
Yeah, well, it's the most important number in markets, I think, right now. And it comes at a time, I think, which we're sort of kind of balancing up this idea of when, you know, if we're sort of positive about that sort of jobs report on Friday, it has obviously pushed back expectations of rate cuts, but you know, markets have sort of, you know, like the result. You know, it shows that the economy is pretty strong, and ultimately it shows, you know, good signs for the upcoming earnings season, which obviously kicks off on Friday as well. But you know, I think US inflation continues to be that number. I think that investors look to, you know, to get those answers on when we're going to sort of see rate cuts. We've obviously had two hotter than expected US prints so far to sort of start this year. Markets pushing back on that June cut, now eyeing sort of July for that sort of first cut. And I think that we've also had a bit of a bump just recently, and obviously I think you spoke about it there, in sort of commodity prices, but obviously that rise in energy prices, I think, could dampen, you know, headline inflation. I think you expect it to rise to 3.7%. The risk is that we get another, you know, another print that's over, you know, expectations, which is what we already had so far. But on the other end of that, if we get a print that's cooler than expected, then the Fed may put those sort of first two prints down as maybe a bit of a blip, maybe a bit of a hiccup, and can maybe put the sort of June rate cut back on the table again. So yeah, I think it's a huge week in terms of macro, and that will definitely be the focus.
So data dependent Fed, you know, as they've been telling us for so long. So we've got that to get over on the macro front, and we've got a lot to look forward to on the corporate front, don't we, with US bank reports starting, as they do, on Friday. So what are you expecting to come from this earnings season in the United States, Josh?
Yeah, so we're seeing this earnings season as, I think, more important than we've had in a long time, because ultimately we see two fundamentals sort of driving markets right now. The first is obviously sort of that expectation of rate cuts and double-digit earnings growth. And ultimately right now we're obviously seeing that expectation of rate cuts push back quite significantly. And both those sort of pillars have been what's driven markets so far this year. So given that we're sort of getting a bit of a pushback now on those rate cut expectations, this earnings season then comes to the forefront being sort of even more important. But the good news is that expectations are pretty low, which we think sets that bar to sort of come in and see expectations beaten. Communications and tech, discretionary, they're set to be those sort of leaders, between them averaging about 22% in Q1, but that would be a slowdown from what we had in Q4, which was 38% as well. So yeah, the big banks are obviously going to be in focus this week. They've had pretty much a great start to the year. Citibank has sort of led the way, up over sort of 15%, as we're beginning to sort of see that rotation from investors, maybe from those sectors that have performed really well, such as your tech stocks, into those sort of cyclical sectors that we believe that we're going to continue to see. That's why we've had a bit of a run there. Although Citibank is the best performer on the S&P 500 so far, we'd look to maybe Bank of America as maybe the standout on the back of what has been, a great period for trading revenues and on the back of investment banking fees as well. So they'll obviously set the tone this week, but yeah, a really, really important Q1 earnings season as we see it.
How important do you think those bank results in the US earnings season will be to the Aussie market? Or do you think, because we have to wait till, I think, May to get our banks reporting here in Australia, are we just sort of going to possibly mimic what happens over there? Or do you think our banks will continue or will basically separate?
Yeah, well, I think our banks have sort of outperformed a little bit compared to those sort of US banks. We've got most of those that have recently traded at record highs this year. They've had sort of a bit of a strong run. So I think the US banks maybe have a little bit more sort of catching up to do in that regard, especially the likes of maybe JP and some of those other names, such as, like I say, Bank of America. That's probably one of the least top performers out of those names that I mentioned there. So I think they do have maybe a bit more room to run, especially if those results are pretty good. And as with anything in the US, it kind of sets the scene to what we can expect over here as well. I think the difference maybe is that we're likely to get rate cuts earlier in the US, and we're likely to get more of them as well, which maybe sets the tone slightly differently to our sort of local banks here. And as you say, we've got pretty long wait till we get those sort of full year reports. So look, I think it will absolutely help sentiment if those results are good for our banks, and I think that will give a bit of a boost before we head into sort of reporting season.
Okay, let's get back to the here and now. What do you make of today's performance for the ASX, underperforming the Nikkei in Japan? We're watching obviously gold extending its rally, iron ore doing very well. So what do you think if we finish positive, up by about 0.2%? How would you call it?
Yeah, I think it's a nice start to the week, especially after what was a pretty dismal week last week, especially given that we only had 4 trading days. We were down more than sort of 1.5%. Obviously, tech leading us higher, coming in off the back of that sort of US jobs report, which lifted markets in the US, helping us today. Obviously, you guys mentioned it at the start, but it was kind of the tale of two stories. You had Life 360 at one end, obviously record net additions in the quarter, all of which is sort of building that expectation that that will sort of help revenue and push them even closer to that sort of first profitability. And then obviously Elders on the other side with that earnings downgrade as well. And surprisingly, energy, bit of a drag on the index today, even after we've sort of had this huge run from oil just recently. I think energy is a sector that I think investors are going to be keeping a bit of a close eye on. Some of those local energy stocks, especially like the likes of Santos, for example, are sort of underperforming against the sort of the rally that we've seen in oil prices this year. And if that oil price, continues to stay high and continues to track towards $100, which many analysts believe that could be a target for this year, I think we've got a bit of catching up to do from some of those names, especially the likes of Santos and those stocks that are pretty much underperforming against the oil price this year as well. So definitely a sector that's one to keep an eye on in my eyes.
Fantastic, Josh. Well, it's going to be interesting. Lots happening at the moment. Thank you so much for joining us this afternoon.
My pleasure. Have a great week, guys.
See ya. All right, let's get on to some of these leaders and laggards. And I think we talked about a couple of the real leaders. So Life 360 up by 16%. So really going from strength to strength there, particularly because it was one of those tech companies that was hit very hard when we saw rates going up. Paladin is just
There was
checking.
some broker upgrades saying the uranium stocks are the way to play energy today. And I think it was both Paladin and the other name's just skipping me at the moment. The other big supplier, well, the one that's coming on stream in Australia, Boss Energy. Yeah. So that has supported those share prices. Newmont was actually very strong in the US on Friday, so just follow on trade here with that stock up 6%. And then the likes of Nanosonics up almost 6%, and Genesis Minerals also running up about 5.5%.
Yeah, those are up on, well, Nanosonics. I can't see any specific news associated with it. There you go. Elders, that trading update coming through. Beach as well, updating on Waitsia and costs. Chalice Mining is off by close to 5%. And New Farm, I think that's probably getting stuck
elders.
in the elders. Reverberations, and Core Lithium, they're down by 3% as well. And in the small to mid-cap space, Danny?
Korea.
And
No, there was some news on that one,
M&A.
wasn't it?
Yeah.
M&A,
Yeah.
okay. Korea up by 35%. And then you've got an interesting mix there. Santa Barbara catching the gold love up 12%, and Hutchison up 13%, as was High Pages and Northern Minerals up 10%.
Okay, on the flip side though, there always is one. Yeah, just a motley crew there. Experience Co. off by 6.6%. Tonight, we do get a bit of speak.
More speak. You would have thought they're all spoken out.
Well, you know, they're always ready to talk, it seems. Maybe we'll start seeing more RBA speak popping up on what's to come. But yeah, this is sort of the entree before we get to the main course that we discussed, being inflation reads coming a little bit later in the week. But it's more interesting here tomorrow on the macro front.
Absolutely. We've got the NAB business confidence and the Westpac consumer confidence, as well as the likes of Brickworks going ex-dividend.
Okay, and Brickworks, we've got a new CEO that will be coming through there in a little while, who's been at the company for quite some time. So tomorrow, what's on tomorrow? As far as guests, we've got Adam Dawes will be joining us to tell us what's going to happen on markets first thing in the morning, which will be in the open newsletter. I hope you do subscribe to that. Steve Sosnick, always good for a chat live from New York. We've got Sean Hickman from Market Matters coming through, stock picks there, and Steve Johnson will be talking about a lot of that M&A in the small cap space. As Steve Johnson will be talking about that Korea news that helped send its share price significantly higher.
And let's get a final check on the markets. It looks like the ASX 200 is closed up 0.2%, or almost 16 points, 7,789, and the CBO 200 up 0.16%, or 2.5 points. So we'll take the green on screen and hopefully reversing a little bit of that last week's underperformance relative to the US market.
It was down the local market by about 1.7%, I think, by the end of the 4 trading days. Hey, I'll give a little shout out to Andrew Gagan, our colleague here. If you're into commodities, think iron ore, think gold, think copper last week. He's got a whole series up online called Commodity Calls. So if you go to the website, you'll see it there, or you can go up to the series at the top and you can find presenter series. So just giving him a little bit of a plug for that. And us a plug for tomorrow. We'll see you.
Absolutely. Have a great evening.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil,
Oh, hey, Ken.
here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better.
Still fine with it.
Use your racket.
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it.
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious.
Don't do that.
Ow.